Hey everybody, Alex here. So what if I told you that there was a way to grow your net worth without flipping another house, closing another real estate deal, creating another product or service, or having any kind of side hustle at all? In fact, what if I told you that you could literally be at home eating potato chips on the couch playing video games and still be able to put money into your pocket? Well, that might sound like a pipe dream, but believe me when I tell you that this is very possible, and in this video, I'm going to show you exactly how. Because this is a brand new series called How the Rich Really Get Rich, where I am gone, I'll be diving into some of the lesser talked about side hustles and passive income streams that are rarely discussed in other videos. We've gone talk about some of the tips and tricks that these guys use to get ahead, and we've gone explore some of the hidden secrets that will allow you to be able to put money in your pocket without having to do any work at all. So, coming up in this video series, I'm going to talk about everything from peer-to-peer lending, commercial real estate, syndication, and other ways to make money in the gig economy. And today, we're going to start with one of my personal favorites, dividend investing. Because if you haven't noticed, throughout the last year, the markets have been absolutely crashing. And unfortunately, the situation in Ukraine doesn't look like it's going to resolve anytime soon, which means things aren't going to get better anytime soon. That's why today I wanted to share a little bit more about the world of dividend investing. Because here's the thing. Everyone needs a little bit of passive income in their life right now. So if you're someone who wants to learn how to build long-term wealth, then I strongly recommend that you stick around for this full video. Alright, so before we start, I gotta say it. I am not a registered broker, dealer, investment advisor, or financial professional. And this video is not investment advice. I know I have to say that. Also, I've never gone this deep into dividend investing in a video before because frankly, I haven't had the time. But in the meantime, I've even getting asked a lot of questions about it lately. And since I started getting interested in this topic myself a few months ago, I thought it would be a good idea to cover it in today's video. So if you like this style of content, let me know by hitting the thumbs up button, because why not? On a serious note though, I did recently get a question from a viewer asking about dividend investing and how to get started. So I figured if he's wondering about it, chances are maybe others are too. Plus, I've been studying it myself, and I wanted to learn more. So I hope that you guys find this helpful. Alright, so if you're ready, let's dive in. What are dividends? Okay, so first we gotta start with the basics. What the heck are dividends? Well, a dividend is basically a payment that's made by a company to its shareholders, and this typically happens whenever the company makes enough profit to justify rewarding those who bought their stock. And although dividends aren't guaranteed, they're actually a really great indicator of a healthy business. Because if a company has a proven track record of paying dividends, it means that they're making enough money to cover their expenses, pay their investors, and still have plenty left over for reinvesting back into the business. On top of that, dividends also tend to increase as a company grows and becomes more profitable. Take Coca-Cola, for instance. In 1986, Coca-Cola paid out a 25-cent dividend. By 1995, that increased to $1.80. And as of recording this video, Coca-Cola is currently paying out $1.65 per share every quarter. That is why it is such an attractive option for retirees and other long-term investors looking for reliable income. Now, to be clear, I personally have 0 shares of Coca-Cola, and everything I'm saying is purely hypothetical. But regardless of what stocks you decide to invest in, there's no denying that dividends can be a great way to create a stable source of income. Why invest in dividends? Now, at this point, you're probably wondering, why in the world would you want to invest in dividends? What makes them so special? Well, here's 3 reasons why. First, unlike bonds or interest accounts, dividends are variable. So, instead of receiving a set amount every year, you can receive a larger dividend if the company does well and a smaller dividend if they do poorly. This gives you a little bit more flexibility, especially if you're someone who wants to be able to adjust your investments based on the market conditions. Second, dividends are pretty great for tax purposes, because depending on how long you hold them for, they could be treated as qualified dividends. This means that you can enjoy a lower capital gains rate, which could save you a ton of money depending on your situation. And third, as I mentioned before, Dividends are typically increased as a company grows and becomes more profitable. So not only do you get paid a reliable amount every year, but that amount could potentially increase as time goes on. That's why so many of the wealthiest people in the world choose to invest heavily in dividend-paying stocks. For example, Warren Buffett's company, Berkshire Hathaway, currently owns over $40 billion worth of dividend-paying stocks and receives more than $90 billion per year in dividends. He has even gone on record to say that we are not in the business of making money. We're in the business of making investments that throw off lots of cash. Alright, so let's talk numbers. Now, if you're someone who's actually considering starting a dividend-based investing strategy, here are a few key numbers to keep in mind. Dividend yield is the percentage of a company's stock price that's paid out to shareholders. It's calculated by dividing the annual dividend per share by the current market price, and this is usually represented as a percentage. So for example, if a company pays a $2 dividend per share and the stock is trading at $20, then the dividend yield would be 10%. The second thing you'll want to look at is the dividend payout ratio, and this tells you how much of a company's earnings are paid out to shareholders. It's calculated by dividing the total dividends paid by the net income. So for example, if a company has a net income of $100 and they pay $20 in dividends, then the dividend payout ratio would be 20%. Generally speaking, you'll want to find a company that has a payout ratio of less than 60% to ensure that they have enough money left over to reinvest back into the business and keep growing. Third, you'll want to consider the dividend growth rate. And this measures how fast a company's dividend payments are increasing over time. And this is usually expressed as a percentage. So for example, if a company pays a $2 dividend this year and they paid $1.85 last year, then the dividend growth rate would be 9.3%. Lastly, you'll want to take a look at the ex-dividend date. This is the date that you need to own a stock by in order to qualify for the upcoming dividend payment. So for example, if you wanted to receive this year's Christmas bonus, you need to make sure that you own the stock by November. Alright, so now that we've covered the basics, let's talk about how to begin investing in dividends. So according to the IRS, you have a few different options. First, you could open up a cash account and buy dividend-paying stocks directly. Second, you could open up a margin account and borrow money to buy even more stocks. Or third, you could open up an IRA and use tax-advantaged retirement accounts to purchase stocks. Either way, once you've opened up your brokerage account, simply type in the name of the company that you want to invest in and buy a few shares. Then all you have to do is sit back and wait for the dividends to start rolling in. But here's the thing. It is super important to remember that even though dividend investing can be a great way to build wealth over time, it's definitely not a get-rich-quick scheme. So please do not fall victim to anyone promising you unrealistic returns, because that's not how it works. Instead, you should view dividend investing as a long-term strategy to build wealth over time. And if you're willing to do that, then congratulations. You're thinking like a millionaire. Okay, so here's a question. Do you currently invest in dividend-paying stocks? Comment below and let me know your thoughts. Also, if you enjoyed this video, then make sure to hit the thumbs up button. And if you want to see more videos like this in the future, make sure to subscribe. So with that said, you guys, thank you so much for watching. I really appreciate it, and I'll see you in the next video.